Thursday afternoon. This is Shawn Labelle of the Dekker Hewett Group. It was a positive week here, at least heading into Friday for North American equities, as we really saw a dramatic move higher on Thursday. This was one of the best days that we've seen in almost 2 years out of major benchmarks. This was one of the best days ever for the Nasdaq. Moving markets higher was a lower than expected inflationary reading out of the United States. CPI, the Consumer Price Index, which is something we've been talking about a lot this year, came in lower than expected for the month of September. Inflation was up 7.7% year over year. That was lower than the 7.9% reading expected by economists. Core CPI also came in lower at 6.3%. Economists were looking for a reading of 6.5%. So the inflationary readings are now just well off the highs that we witnessed in June. This just means that the central banks around the world, those interest rate hikes that they've been putting in place, are starting to take an impact here on inflation. It's important to note, though, however, is that these central banks aren't looking at single months. They want to see several months of a trend of lower than expected inflation before they're really convinced that inflation is heading lower. So we discussed all this stuff in this week's Market Watch Weekly. It's also worth just revisiting today's move. This is why we tell investors it's not about timing the market, but time in the market. Days such as this, where the Nasdaq was up over 6%, these are enormous returns. And if you were to go to cash and then missed out on a day such as this, it becomes really difficult to make up those returns in a single year. So this is why we always tell investors, do not lead with emotions, as emotions generally will lead you astray. So we discuss all this stuff in this week's Market Watch Weekly. We will end it there. Hope everyone enjoys their Remembrance Day tomorrow, and we will talk to you again next week. Cheers.